It's been a while since I last made an Elrond update, but it's because we were talking about $45 for multiple months and how we did not want to lose it. And of course, when we eventually lost it, I was saying, guys, the bottom is not in. We're looking at $30 and $21, and I'll show you why specifically. So that was your head and shoulders patterns target, and this was the descending triangle target over here. So you put them on the breakdown, and those are your targets. We almost met that one over here, $2 off and reverse. So basically we were saying around here we want to see $45 reclaim. I'm going to start making Elrond videos again. So look at where we are right now. Ever since I said that, it started pushing towards $45, and now it looks like the last 2 weeks in a row, not counting this current candle, but the prior two candles. So that means this candle and this candle did close above $45. So we've actually, at the beginning, when this candle closed, this candle here that pushed above 45 actually went down towards the golden pocket and held it as support. So only once we had that daily candle close, rejecting it and closing up here above the 786 is signaling I want to go to the resistance. So we do see our 1 fib level. If we turned off the moving averages, the 786 closing above that signals a pump towards the 1 fib level. But this is a nice little tip for you guys. So we use the 20 over here, and you can see that this was actually sitting a little bit underneath $48, which is this wick high over here. So because it was actually underneath, this is our resistance target rather than the 1 fib level. So understand that the 20 over here is acting as resistance. This is what's been pushing us in this downtrend, keeping us in this downtrend. Every time you run into the 20 over here, you should reject it. Here we got above, which is beautiful, and you actually closed above it and confirmed it as support here. So another amazing candle. Now let's just take out that wick high over here, and we've got this bullish continuation. So after this candle, next week we need to see a close above that, and we're going to 225, 235, 260, But unfortunately, the next week we didn't close above that wick, but we closed below this wick. So if we were waiting for the bullish signal for a weekly candle close above this, equally the bearish signal is if we lose the wick. So if we lose this wick here, which means we're losing the 20, we're losing this, it's a short. And so it means that the push above the 20 was a fake out. And so now we're below the 20, we should continue with our bearish trend. Then the bearish cross formed, we lost the higher low, and then we continued lower. Do you understand that? So every time we run into this 20, it should just keep us in this downtrend, understand? So when we run into it, we should actually go lower than the lowest point. So that's why I was pretty confident in calling for lower lows. It's just that we didn't actually meet the targets, and we are trying to invalidate those targets. So by now, getting above $45, seeing 2 weeks above, and this potentially being the third week. Let's not get too excited about this third week. We can go off only what is confirmed. And actually, in fact, what is confirmed to us, yes, we've held the golden pocket and created the reverse wave, because after a push down, you're retracing into this zone over here to continue lower. Understand that. But we created the reverse wave by flipping into support, by having these wicks going downwards. We don't want wicks going upwards over here. We don't want multiple wicks going upwards signaling we're going down. We want to get above it and then have wicks going downward signaling I was trying to go down, I didn't want to go down. So these are bullish candlesticks, but understand, although these are bullish, it doesn't just mean enter. Understand that we have this on the left of us and the 20. So again, as long as you're below 48 and as long as you're below 47, this $1 range, chances are we can actually continue lower. So understand that we need to take this 1 fib level out, which would signal that we take out the 20 weekly moving average. So please write in your notes, keep it in your head, engrave it in your brain. We need to see this week's candle closing above $48, because that is what's going to signal a pump towards 75. Now, as the weeks go by, this will drag down. So let's start calling for about 67 to 69. Well, actually, I'm going to go down to here, 65 to $70. So this will be my target if we're seeing it close above 48. So this could be a pump after the weekly candle close from here, 48 towards, let's just call it 65, a 33% pump without leverage. So if you go ahead and take that, beautiful, but we're not ready for it just yet. Remember, we need to see the closes above these two resistances. I hope this video was in depth, and hopefully we can actually invalidate these targets. Otherwise, there's still downside to come, understand that. But it's beautiful that you lost the low, which was over here that $37, my mistake, and you reclaimed it, confirmed support, confirmed. Now we just need to take out this resistance, otherwise we are dumping further. Okay, thank you guys for tuning in. There's going to be a giveaway on my Twitter, so make sure you're following my new Twitter, LouisVibes_. I'm also doing my discount, extending it further until we hit 5k subscribers, so make sure you help us hit 5k, and I'll catch you guys in the next Elrond update. Peace.